I spent a year and a half hustling, but the eventual goal was to do this. So I say, pick what makes sense for you, but there are so many different ways to do it. And then even as a passive investor, you're still making 3 to 5 times as much as you would in the stock market, right? In terms of returns. And if you know what you're doing, again, you need to educate yourself a bit,
Right.
but you're lowering risk and increasing your returns. And so you get to pick and you get to shift from one bucket to the other at any point.
Your network is your net worth. Come listen to some of the most successful people I know share invaluable knowledge, stories, and advice in real estate, business, and beyond. This is Weiss Advice. Whether you want to take your business or personal life to the next level, look no further. Welcome back to another episode of Weiss Advice. I'm your host, as always, Yona Weiss. I am really excited to be here today. We have another phenomenal guest. We have Dr. Param Baladandapani. I think I got it right. I think I messed it
You
up,
did.
but
Nailed it.
regardless, I nailed it. Okay. I'm so grateful for you to join me on the show. How are you doing today?
I'm doing great, Yona. Always a pleasure to chat with you.
Likewise. And, you are coming from the medical background, going into real estate. It is a story that is not seldom told, but it's exciting to hear from people like yourself who have really changed the trajectory of their lives kind of through in the middle of their career, successful career, and just seeing, wait a second, there's more to life than just working the 9 to 5 and being a grind. I know that the medical profession can be extremely taxing on your time and on your life. So I'd love to hear, kind of a little background, how you got started in where you got the real estate bug from and how you were able to really transition that to being able to live life on your terms, financially free, and now teaching others in the medical profession to do the same.
Yeah, thank you for that bit of background. And so I would say my life was very typical compared to other professionals, right? High income professionals. So finished my training at the age of 30. And for the next 10 years, I had a great job in radiology. I enjoyed medicine. And I thought I was doing everything right, saving and investing in the stock market. And, I thought it was pretty savvy till 2019 when there was a merger at work. And like they say, it's in times of crisis that you really start questioning things and seeing if you're on your path. And what happened is that it was a 6 month period before, and I had something else lined up, but it was still a turbulent 6 month period
Mm,
professionally and personally. And I realized that I'd never wanted to be in that position or put my family in that position again. And when you are in a W-2 job, it seems like, and I love medicine, but the thing is that it is still a W-2 position where
sure.
you're employed. And that's how I was practicing. I realized that my income wasn't as secure as I thought it was, right? And so that transition at work really highlighted something that I
Hmm.
wasn't paying a lot of attention to. And I started looking at my finances and I was like, well, I've been, I was making 500,000 for almost 10 years at that point. And I was like, I should be pretty well off. But then I actually ran my numbers and I figured out how to run those numbers. And I was like, well, I only have $2,000 a month in passive income. If I never went back to medicine for any reason, if I was ever in that position, that's all I had. And I needed at least 10,000 a month to be financially free and
Right.
to not have that stress. And so that's when I started deep diving and already started investing in real estate. I think most of us, stock market, everybody's investing in the stock market. Real estate was more like I had a mentor and it was more diversification. But then I looked at the cash flow. I was like, this really isn't going to, how is $500 in cash flow from a property ever going to get me to financial
Right.
freedom?
Right.
And so I put it on the back burner. But then when I looked back, I looked at all the equity that I'd grown in those properties over the years that I held them. And I realized that it wasn't just the cash flow. And you talk about this a lot. It's tax free cash flow that we're making, right? That itself is very efficient. All the equity I'd built up. And I realized that I had a third of my money in real estate and I had 6 times the returns from it once I factored in debt pay down and equity build up over time. And because, we use leverage in real estate and the cash flow and the fact that it was tax efficient. And that was my aha moment. And I was like, okay, I've been doing something wrong because, obviously 10 years in, I really wasn't where I needed to be, but I wanted to shift so that if this ever happened again, I would have the freedom to walk away from something that wasn't aligned with where I wanted to be. And I wanted that freedom for myself and my family. And then, I started going into this rabbit hole and I learned about tax strategies. And you talk about this a lot, short-term rentals and real estate professional status. And I got sucked in. And then I had a 3-year goal to get to financial freedom where I had that 10,000 in passive income and I could do nothing and it would still keep coming in. I got there within a year and that was
Wow.
my, I was like, okay, someone needs to be talking about this. Why is no one talking about this? And so that's when I started community building. I was talking to high income professionals, physicians, And I just wanted them to learn these strategies and start employing them. And so for me, it was crisis. That's when I figured things out. And
Right.
a lot of us will get to a point in our lives where we'll have those crises.
Yeah.
But if you can learn it ahead of time and you can build that net of passive income, then you have something to back you up when you find yourself in that position.
Yeah.
And so now we're at 20,000 physicians strong. That's the size of the community.
Wow.
I started a coaching program because I felt like I could talk about it, but putting it into action was a whole different thing. We went that route. And then I realized that 80% of professionals do not want to be investing and holding properties directly. They wanted to be passive investors. So we built out GW Capital, which is the syndication lender, where now we have over 2,000 doors and over 375 million in assets under management. We take in partners and we help people who feel like, I love this, but I don't want to be going in and doing this
Of course.
myself. They have a way to do it. And so it's grown, and I built the freedom for myself, and I'm helping others do it. And I think now it's all about impact investing. And so I have a nonprofit in India, and a big part of why I do this is the impact it has on the families in our community, but a secondary impact where we're helping children with disabilities in rural India. And so that's been the journey. And
Wow.
so I love medicine, but I feel like everybody, even physicians, non-physicians, we need to have that passive income backup. So we're really living life on our terms.
Wow. There is a lot to unpack there. It's an incredible story. And I appreciate you being able to condense that down to about 3 or 4 minutes. Like that's pretty awesome. But I want to go back to a couple things that you said during that, which was, first of all, you talked about even early on, you were diversifying, you were invested in the stock market, you were invested in some real estate, and you
Yeah.
mentioned that you had a mentor. But that, to me, that itself seems very rare. So,
Yeah.
like, at what point did you come onto that, or even learn about real estate first? Because again, yes, physicians, from my experience, those who are invested in real estate who don't necessarily have the bug or haven't gone down the rabbit hole, as you put it yet, maybe have a single family or two kind of long-term rentals or condos, and just kind of, because that's what you can do. You have all this extra
Yeah.
income, you're coming in, you want to put it somewhere, and you may have a financial advisor, which is pretty common. You're kind of taught that.
Yeah.
And that's another thing. We can get into that a little bit if
Yeah.
you want. But a lot of physicians are kind of groomed into take on a financial advisor who is really basically just
Yeah.
telling you to put all your money in the stock market because they're being
Yeah.
compensated for it. But how did you come on to a mentor who was advising you to even invest in real estate? And how did that start? Because again, you mentioned like you had some passive income at a certain point before the crisis. And what types of properties were those at the beginning?
Yeah. A great question. And I think I was very fortunate and very lucky because I wouldn't be here if I didn't have that, if I didn't have those first few properties to like lean into. But I come from some immigrant, and our community in India, we own land and real estate, right? So I've seen that growing up. And so I would say it was a lot easier for me compared to other physicians I coach because I didn't have those barriers to investing in real estate that exist for a lot of people. I've seen people do it successfully. That being said, I moved to this country. Medicine was my source of income, my source of security. So I didn't necessarily delve into real estate investing. But my first job my mentor was my colleague at work. And so I was freshly trained so I could read breast MRI because it's a breast imager. And I was assisting him. I was helping him learn. And, he was helping me invest. And he said, okay, Param, I want you to have a diversified portfolio. This is what I want you to do with stocks. Dividend aristocrats do this. He obviously wasn't investing in index funds at that time. And so that was a shift later on. But he said that. And then he was also a third generation real estate investor. So he said,
Mm,
Param, and his brothers were playing golf and managing ancestral property. He was the doc. But he said, Param, do this. I have a team and I want you to like piggyback onto my team, invest here. And he said, I make mailbox money. I just like walk to the bank
wow.
and I'm laughing all the way. Even if something's wrong at work, I don't have to worry about things. So do it. But again, in my head, I was just thinking diversification. I
Right.
wasn't thinking asymmetric risk reward. I wasn't thinking I'm going to have significantly higher returns with lower risk and be tax efficient. I wasn't thinking about that. I was like, let me diversify. But then again, you lean back into the things that are easy, where investing in the stock market is like, you know what? It's easy,
It's
it's
so easy.
automated,
It is. Right.
it's just so much easier. And then till I got to that point, I didn't realize how much of an impact real estate had on my portfolio, right? And so when that merger happened, I realized that if I were to continue investing in the stock market, doing what I've done for the last 10 years, 17 years to financial freedom. I used a retirement calculator. And for anyone listening, it's generationalwealthmd.com/retirement. I built out my own calculator because I was like, this was my aha moment, figure it out, figure out what your number is. But it was 17 years. And with real estate, depending on how you do it, actively or passively. Initially, I was very passive. I would buy single family homes that did not require renovation.
Right.
And I had a property manager manage them. And so I was piggybacking onto other people's teams. And so it was still very hands up. This was all remote, right? Because
Right.
my mentor, Eric, he lived in New Jersey. We practiced in New York, and his properties were in Nashville, Tennessee. So I realized I could do this without even like looking at my property. So I haven't laid eyes on some of my properties yet, right? And I've owned them for 10 years. And so that's how I started doing it. But then when I really accelerated, I started doing, like I said, short-term rentals and rehabs, and I would rehab them without a general
Hmm.
contractor because I said, you know what, I want to get the hours for real estate professional status. So let's just do this. And I did that while working full-time and raising a 2-year-old and a 5-year-old at that point. And I say that because I want people to see that it just seems so much more complex when you're trying to figure out the steps. But like I could invest out of state without looking at my properties because I saw someone do it right. And I just want to mention it because I want people, professionals, to know that you can do it even though it seems complex, as long as you have the right steps and the right people. But just knowing it's possible is like the first thing. And like you said, even for me, even when I started investing in real estate, the stock market was easier. I never used a financial advisor, fortunately, because I was like more a DIY person. And so I
Okay.
avoided the huge fees, and it wasn't the vested interest of a financial
Mm,
advisor who cannot talk to you about alternative investments, right? They're
right.
not allowed to technically. And so now you're stuck in all these correlated investments, so just the stock market. Bonds also kind of have positive correlation. Same thing with REIT. And you don't get to tap into this whole world of non-correlated investments that give you that asymmetric risk reward. And so I was still leaning into the stock market, but then that's when my shift was that aha moment that I talked about. And I
Yeah.
realized, okay, this is what we need to do. And I think for most people, it's the same thing. We're taught to invest in the stock market, and that's what we see. But if you really look at billionaires and ultra high net worth people, they have 50% of their investments in alternative assets, right?
Right.
Ray Dalio's principle, the holy grail of investing is that pick multiple non-correlated assets. And that's what's going to give you, that 90% of your ability to get to financial freedom depends on your asset allocation. And that gives you that asymmetric risk reward, which is what I like with everything that you're doing in educating, right? This is
Right.
what we're helping people understand.
Wow. Okay. First of all, you sound like a superwoman because, for a lot of people listening to this, you're like, okay, yeah, she's working full time as a physician, raising 2 small kids, renovating her own properties. Like, yeah, sure, that's doable. No, not right. Like, for a
And
lot of
that's why I
people,
say that's true, right? It sounds complex. And I even had a friend, I was doing this and I was like acquiring 2 properties in Texas, renovating a property in Bakersfield, which is where I live, right? Central Valley, California. She's like, I think you should slow down. I think you may be taking on too much. And I was like, well, technically the 2 properties acquisitions in Texas, they are 2 hours total from the point where I tell my agent, hey, I want to buy something, to when the notary comes home and I sign paperwork. It's like 2 hours total to acquire the property. That's all my time that goes into it. And then the rehabs, they sound complex, right? But I think the first time around, I was figuring it out, right? And this is where mentorship comes into play. When you know what you're doing, it doesn't take as long. But the second time, it was like 2 weeks to get the rehab done, 3 weeks actually. And forced to I bought the property for 360,000. At the end of the rehab, it was worth 420,000. So it boom, in 3 weeks, the equity had increased massively. And I only put in like $15,000 into the property, right? So
right? So you're
significant
not
boost.
doing
And
like
I
huge rehab. You're not doing like huge gut
I do
rehabs.
moderate
Right.
rehabs, right?
Right.
Not gut rehabs, because those are a little more risky and
Right.
not for me. And I always say it's like one size doesn't fit all. Pick what makes sense for you. If all you want to do is syndications, do it. Some physicians, I mean, and like compare what I do. We have physicians in our coaching program who both work full time, run their own businesses, and they'll buy short-term rentals, rehab them, and self-manage them. So that's a whole another level. And they have 3 kids, right? So people can do it all the time. The reason they do it is because it helped them shelter like over $1 million of income from taxes in 1 year, right? So
Right.
that makes sense to them. And then they have their systems down pat. They do it as a team. They bond over it, whatever. But there's so many. And the second time I was doing my rehab, I walked in there and I was like, why everything's going on so smoothly? Why does that have nothing to do? What am I even doing here, right? So it just sounds more complex than it is, and there's a way to do it. But the bottom line is, and I say, one core concept is work smarter, right? Think about
Sure.
asset allocation. But the second one is one size doesn't fit all. So if someone's doing this, and don't just piggyback onto somebody else's idea, right? And I say the way to invest in real estate, there are 3 categories. You could be a pure investor where you're like, I want to be completely passive, going to put my money into someone else's syndications, or do what I did initially. I'm going to buy a long-term rental, have a property manager manage it. I
Right.
may never lay eyes on it. And I am perfectly fine doing that. And then there are people who I call entrepreneurs who are syndicators who go and buy these deals and bring people into the deal, who are short-term rental investors where you run that like a business, right? You
Mhm.
need to be on top of things. You want to make sure you have visibility and, you're efficient. And
Right.
then the middle category is what I call short-term hustlers. That's what I did, right? I was like, okay, for 2 years, I'm going to hustle. I'm going to really accelerate, get to that point of financial freedom. and then I'm going to make everything passive, where now I spend on my personal portfolio, I spend less than an hour a month, and it's giving me, 6 figures in passive income. So I
Wow.
hustled for a little bit, right? I spent a year and a half hustling, but the eventual goal was to do this. So I say, pick what makes sense for you, but there are so many different ways to do it. And then even as a passive investor, you're still making 3 to 5 times as much as you would in the stock market, right? In terms of returns. And if you know what you're doing, again, you need to educate yourself a bit,
Right.
but you're lowering risk and increasing your returns. And so you get to pick and you get to shift from one bucket to the other at any point. And I think the whole point is like, let people know that they have different things that they could pick from. And at a different point in your life, different things may make sense for you. So it's all very fluid and you get to pick and choose.
How did you become such a good educator? Because I'm just listening to you and I'm inspired because the way that you're able to communicate all the things that you've done and how for other people, and obviously you're doing this pretty actively at this point, but
Yeah.
did you have training in that as well? Or did you have a background in teaching? I mean, through the radiology, you mentioned you were kind of training another physician. I'm curious about your background on that because it seems like you're a natural and it seems like you're obviously you excel at it. And I'm just being transparent here. I love it. I'm enjoying this conversation more than most podcasts I have.
Be honest, the end product of like 5 years of community building, because I think initially I would just be like, you need to do this, you need to do this. And, people don't really relate to it. Right. And so I would say any community building, growing the businesses, it's all a spiritual journey. And a big part of that is like, how do you communicate things? Right. If you look at the essence of really communicating and educating, it's asking questions and telling stories. And so I had to learn to incorporate all of that, because if our mission, your mission and my mission at the end of the day is to have people make massive shifts, then there's just a few ways you can make them have those shifts. And it's asking the right questions and then telling stories. And so eventually I figured that, sometimes people would come in and be like, I want to do short-term rentals. I want to do short-term rentals. Like, is it the right thing for you? Right. And so it's learning
Right.
through experience that sometimes people pick things that don't necessarily make sense for them. And then figuring out how to lay that down to them and make sure that they're on the right track. So yeah, so it's been a journey. And I don't think I would never have called myself a good educator. I'm very impatient, but I had to learn patience and I had to learn how to influence people and help them see things, differently. And so it's a work in progress. I'm sure I have a long way to go. And I'm hoping that every year I just get better at it.
Well, that's the goal. I mean, you continue to learn, you continue to figure out the right ways to communicate things and what works the best. But I mean, like I said, you're phenomenal. So congratulations
Thank you.
on your success in that. And I enjoy it. And I've seen you at work as well on some of your webinars and things like that. So with your community. So we always at the end ask people how people can find you, reach out to you. But I just want to stop here in the middle to just people who may not listen all the way to the end. Like you talk about the community you build, the generational wealth. Is it a Facebook group? Is it an offline kind of community? Can you just share quickly about that?
Yeah, absolutely. So generationalwealthmd.com is our website. And for people who are listening, who probably think, I want to actually look at the numbers. We have a free ebook on there where I go over, okay, this was my journey with property one and how I did it passively. And but I wanted to really accelerate. This is what I did. So that's a great resource for people who are just trying to absorb the concept. And then we have free retirement calculators and long-term rental calculators on there, a lot of free resources. We do have a Facebook group with the same name, Generational Wealth MD. But for those who are thinking, I want to be passive and invest passively, gwcapital.com is where we bring better investment opportunities to our community. And so if you want to go more the passive route, that's a
Right.
great place where you can get resources. We have a guide on there. That's gwcapital.com/guide. And it was a labor of love. I spent months putting together like a 40-page ebook where you can learn how to do due diligence on syndications, so that you go in and you look at the first deal and more than 90% of, I would say more than 95% of people investing in syndications. And so that's another great resource for anyone looking to educate themselves further.
Very cool. Okay. We'll make sure to put all that. I always ask at the end how people can find you and reach out, but
Oh,
I
I
think
appreciate
it's
that, Yona.
so powerful what you're doing. People may be like, hey, I want to check this out right now. But please do listen all those again, because we're just getting started here. And you talk about the syndication route and the short-term rental route. And I know you played your hands at quite a different few things. Is there one area that you personally find works for you more than others, or you enjoy more than other aspects of real estate at this point?
That's a great question. What I realized is that it's changed for me over time, Yona. So
Right.
at this point, all of my capital also goes into our syndications, right? So I like being hands off more than anything, and because it just gives me more freedom, right? But that being said, I think there was a period of time where I did want to be a little more aggressive from a tax strategy
Mhm.
perspective and forcing appreciation. And at that time, I think I enjoyed the rehabs more than I did short-term rental because that is a whole, like, it's another business. I don't think it was my personality. I like things being very low risk and I like them being very automated. And so again, we have physicians in our community who own 10, 12 short-term rentals, manage them themselves, and they've kind of replaced and exceeded their clinical income through that. And they probably have one VA assisting them in doing it, and they've built the systems out. Kudos to them. And some of them coach within our program. But for me, I think I enjoyed rehabs more than anything else because I love, like, like that quick buck and really, seeing that space evolve. And now I'm like anything as passive as can be because and you have kids and you probably realize this, the older they get, the more they need you. And
Yeah.
so, and as it is, the community building, the companies take quite a bit of my time. And so that's where my focus goes. And so if my real estate can be passive, then it's serving me in the best possible way.
Gotcha. Okay. So within the GW Capital, you have a team doing a lot of the operational work and things like
We
that.
have teams. I am heavily involved in it, obviously, and
Right.
in the acquisition part. And so, like I said, that does take my time.
Sure.
The content creation, community, the coaching, all of that does take my time. So I need my portfolio to be my personal portfolio to be super passive at this point. And so now I invest primarily in our syndications.
Gotcha. Gotcha. And you mentioned 2000 doors. What types of properties are you investing in through that syndication?
And so we've primarily so far done stabilized value add multifamily, and you know this, but for those listening, so that's mostly apartments. And this has been in the Sun Belt because those are hybrid market. They have significant cash flow and also see
A
quite a
lot
bit
of
of
growth.
appreciation growth because of my in migration. But these are assets that are already over 90% occupied. So when we're going in day one, and our target has been to have cash flow anywhere from 4 to 7% in cash flow day one. So you're getting money in your bank account. And then the goal is to improve operations, do value add if required. Sometimes we do tax exemptions, and that means instant equity that's built up because our NOI goes up 30 to 40% day one because we're going in and reducing property taxes from $1 million to 150K, right? So it's mostly stabilized value add multifamily where that's low risk. And then the markets per se are also low risk because these are great growth markets. We have been exploring other asset classes, looking at short-term rental funds, mobile home parks.
Hmm.
And so I'm exploring them, obviously doing my due diligence on them. We do want something that, again, if we're taking on a little more risk, it has to have a significant amount of return
Right.
associated with it. And so waiting for the right opportunities. But the goal is to expand on that and then provide people with, because everyone's goals are going to be different, right? Some people are going to be more focused on higher cash flow from day one. So sometimes with those short-term rental funds, you can get 20% or, a significantly higher cash flow. So again, we're exploring other opportunities so that we can find things that make sense for different people with their different requirements. But I think the core of what we've done so far has been stabilized value add and then
Yeah.
multifamilies.
That's great. Yeah. I mean, and it's obviously a very popular asset class within the syndication world. And we had a great run. The last couple of
Yes.
years have been a little bumpy. The last year or
Yeah.
so, I personally have invested in multiple syndications within multifamily. And unfortunately, I had a couple, capital calls and a couple of things where
Yeah.
it didn't really go as planned. That's
Yeah.
part of the risk, and I think it's important to communicate that, which I'm sure you do, to your potential investors
Yeah.
and current investors. But within, you said 20,000 physicians or people within your community right now who are participating in some level or another, do you find, and I'm really curious, I don't know how well you kind of delve into the numbers per se, but I mean, how many people actually take it seriously and make changes? Because I feel like it sounds amazing and it sounds like,
Yeah.
yes, like obviously you've lived through it. So your story
Yeah.
is extremely inspiring and is relatable, especially if you're the one that's telling it.
Yeah.
But I feel like still so many people are just stuck in that and
Yeah.
can't even see themselves getting out of it. Like, what percentage of people do you see actually making those changes?
So I would say in terms of how many people actually join our coaching program or actually invest with us as investors, because that's a more reliable number, right? In
Yes.
terms of are they
Right.
really making shifts? I would say anywhere from 10 to 15%, right? And so when we host events, that's the same thing we see. The people actually take action and get things done. I would say are in that range, right? 10 to 15%. And I think it's interesting, because sometimes I hear people say, well, this sounds too good to be true,
Yeah, of
right?
course.
That's
Right.
the big thing. It's like, and why isn't anybody else talking about it? And the interesting thing is that I would say till like a decade ago, it was a question of access, right? People didn't really have access to alternative assets as much. I mean, you could buy a single family home, but syndications, there wasn't people really didn't realize what those opportunities were even there. And now with Zoom and the internet exploding and people really having
Social
access to all of
media
these
and
opportunities,
everything. Yeah.
it's a very different world. And so people like the rich always had access to these opportunities. It's just that the common professional really didn't learn about it or know about it. And yeah, so it's been interesting. But again, there are barriers to making those shifts. I think a big one is awareness, and that's what you and I focus on. But then it's also people feeling like they don't have the capital or they don't have time or thinking it's too risky, I think is the
Right.
biggest one. And that's what we try to do, chip away at, right? Like, and so as we educate and, and that's why storytelling becomes important and giving examples and numbers. And because some people are data driven, others connect emotionally. And so we
Right.
try to do our best as far as educating. And I think the other thing is that when people take action, sometimes they really, and I did this too, right? I waited 10 years before I actually saw the benefit and said, oh, okay, maybe I need to pivot. But if in 2010, I had the knowledge to say, well, this is how impactful this can be. And if I had given it my all back then, I would have become financially free at the age of 32 or 33, right? Because I didn't have kids at that time. I had a lot of disposable income that I could have funneled into real estate. But sometimes people wait to see the impact in their lives before they really start accelerating. And so I think it takes a little more time.
Yeah. And, you need to push. I mean, you talk about that. A lot of people think there's not a lot of information out there, people talking about this. To be honest, now there's a lot of people talking about this, right? And I think it's
Yeah.
amazing how far we've come. And kudos to you and so many others like yourself who are doing that, who are taking their personal experiences and
Yeah.
then paying it forward and really sharing that with others. And I've seen quite a few people, and we've had a few guests on the show also previously who are in similar position in different professions or medical profession who are doing, a similar thing. I think there's a lot out there, and I think you can relate to people who are in your field more, so it makes more sense to kind
Yeah.
of do like
Yeah.
a curated group focused on that. But,
Yeah.
really anyone's welcome, right?
Exactly. Anyone's welcome. I would say 75% of the community is physicians, and the rest of them are non-physicians, and everyone's welcome. I think the challenges are the same for most of us. And I
Right.
think, especially if you're a professional, you really want to do your own due diligence, which is why we have the guide, which is why we lean into the numbers, right? As opposed to just saying, oh, this is an awesome deal. Really into the numbers so you can do your own due diligence. And I say for anyone listening, I think, especially in the current environment, and like you mentioned, Yona, the last few years, we've been in technically what we would call a recession, right? So we had the peak. The peak of the market was March 2022. And then again, we did see asset values drop significantly, up to 30% in certain markets. And the deals where the debt was a little riskier, those
Yeah.
deals did not perform well. And so, and then in all honesty, up cycle and a down cycle, the fundamentals remain the same. Fundamentally, get into really strong markets, which is what we look at. Make sure the debt, because the debt is where you have the highest risk in multifamily, right? In real estate, because of leverage. Leverage gives you the returns, but it's a double-edged sword.
Right.
So really look at the debt, and that's what we've been doing. And I also tell people, look at deals that have significant cash flow, especially in the current market, because if someone's going in saying, oh, well, day one, we'll get maybe 1% cash flow, but our plan is to do this. I say, look at day one cash flow. That's what
Right.
we do, especially when we underwrite. And the deals we've been going into, we have, anywhere from 5 to 7% cash flow day one. And that's your buffer, right? That's a
Mhm.
safety net. And so I think professionals really are more conservative per se. They're not speculators. They have a great job. Then this is just a vehicle for wealth building and for passive income. And they want to be very intentional. So do your own due diligence,
Sure.
educate yourself. And I would say at this time, those are the two things we still continue to look at. And if you focus on that, then you can find some deals that really, no matter what happens with the market, they'll still be able to withstand it. And it's all about having the ability to hold. And if you have the ability to hold, then in the long run, real estate will always do well.
Right. I mean, yeah, that's absolutely right. In real estate, you can sure make money in the short term, and you were doing that with the fix and flips and those kind of things. But most wealth in real estate is built over the long term, and so
Yeah.
it is a long game. And I agree with you. And I do just want to put in a caveat here because we're not giving financial advice specifically, and there's no such thing as guaranteed cash flow.
Yeah.
And even
Absolutely.
though the numbers may say so, I'm just going to share a personal anecdote because I think it's important. Obviously, don't take
Yeah.
anecdotal evidence, but I invested
Yeah.
in a deal, a passive real estate deal, which advertised cash flow from day one. And as well as, great returns over the long term,
Yeah.
right? Like the
Yeah.
5-year returns was like crazy.
Yeah.
Unfortunately, things did not work out the way that were intended. And this is with, a
Yeah.
group who had 500 million under assets under management at the time. So it wasn't like
Yeah.
I wasn't investing,
Yeah.
and these were people that I knew for years. So it wasn't like, but things go south out of
Yeah.
your control. And it happened to be
Yeah.
that this was literally like right before COVID. So it's not a great example, but literally we were not able to have cash flow for the first 18 months. of that deal. So
Yeah.
I invested with the intention of getting cash flow, expecting
Getting that passive income.
exactly,
Yeah.
getting a check, every quarter for, a few $1,000s, whatever. And it
Yeah.
didn't materialize. And so, yes, you should do your due diligence. Yes, you should do that. But no, there's no such thing as guarantee, and everything has
Yeah.
risk in it as well.
Absolutely. Absolutely. Yeah.
Param, this has been awesome. I want to transition now because time flies. I can't even believe we've been talking for over half an hour here, but I love to transition to what we call the final four. And these are four questions I ask all my guests. First one for you is, what's the worst job that you ever had?
I know that's an interesting question because I did not hold other positions before I've worked in medicine. And so I don't know how to answer that. I think I have to pass on that.
You
I
gotta
don't think
pass.
I've had a job yeah, I haven't had an income producing job apart from medicine, I would say, and then now as a business owner. So I don't know how to answer that question.
So you've had great jobs the whole
I
time.
have, I have, I've had great jobs that I've loved and I would do all over again. So
Okay. Well, you know what? I think you're the first person who's ever passed 450 guess. It was bound to happen. Okay. Second question. What's a book you've read that's given you a paradigm shift?
So I was going to say Rich Dad Poor Dad, but I know a lot of people say that. But that is definitely a book that did give me a paradigm shift. And I'm going to stick with Never Split the Difference because I think from a perspective of communicating and
Communication.
understanding
Yeah.
people, and I read the book the first time around and I stopped. I was like, no, I cannot let a hostage negotiator talk to me about communication. And I did not want to learn to negotiate. I want to understand. But then I reread the book because my mentor told me, go back, read the book. I want you to read the book. And I realized it was all about understanding and empathy and then using that to communicate. And so it's what people are asking for is not really what they're asking for. Find out what they're really asking for and see how you
Yeah.
can meet their need while also meeting your need. So I thought it was a great book because it really talks to you about relationships and what's superficial and what the core need is. And so I think it's a great book.
Yeah, absolutely. And that's a fascinating book. The first time actually, and I totally agree with what you like, I can relate with what you're saying about reading it and like, okay, this is like a former FBI, hostage negotiator. Like, what is he going to teach me about communication? But the truth is, the first time I actually heard about that book was on a podcast where he was a guest. The author, and I'm blanking on his name right now, was a
Chris
guest.
was.
Chris Voss. Yeah. He was a guest on a podcast with a friend of mine, Steve Passamano, I think from Denver. And he gave this live simulation basically where it's like this thing where he calls it 20 seconds or your life, something like that. And it's like
Mm,
this live simulation where he's like tells the podcast host who has no experience in hostage negotiation obviously, he's like, do you want to be the terrorist or do you want to be the negotiator, right? And he's like, I'll
right.
try to be the negotiator, right? It was this whole thing, and it was like 20 seconds of your life basically. You have to convince this person within 20 seconds or 60 seconds or whatever it was to calm down, to release the hostage, whatever it was. And I was so enthralled by that dialogue. I
Yeah.
was like, I need to listen to more of this guy. And so I got the audiobook and it like
Yeah.
changed it inside because it's him talking in the audiobook also. And it just like totally changed it for me. So,
Yeah.
sometimes
Yeah.
it's the physical book that is like, okay, yeah, this is interesting. And then when you actually hear the person who's living through it and doing it speak about
Yeah.
it, it's a totally different story.
I agree. I agree. I think sometimes it may take reading it twice for people to really understand the core concept, but the fundamental concept I think is similar to what you would see in a lot of books, including spiritual books, I would say, which is where it's like, deep empathy is where you start. And so,
Yeah, for sure. Awesome. So third question for you is, what's a skill or talent that you would like to learn?
oh, that I would like to learn.
Anything. It can be anything.
I would say the ability to influence people because that's something I'm working on constantly. And so that starts at home with kids. And
Mm,
again, if I'm an educator or a thought leader, and that's the role I want to play, then I want to be able to influence people to make more empowering decisions and taking action. And at work, I think it's important to learn to influence and be a leader. And so I think those things are tied together. So I would go with that.
yeah, there's a lot can be learned through that. And I think learning by example, right? Like leaders you last, like Simon Sinek and those kind of, I don't know if
Yeah.
you've gone through some of his works, but talks a lot about those kind of things.
Yeah, I think I love his three-circle method, I think, which where the core of it is why, and we always start off with the how, but to start with the why. And so a lot of
Start
ways
with
to
your why,
explain
right?
things to people that, again, if you really know how to influence people, and I make a very strict distinction between that and manipulation, where
Of course.
influencing is when you're trying to do something to benefit the other person, but then really help them to have the insight and really take massive action. So I think that's a wonderful skill to have.
Yeah. And it's really the core of that is kind of getting people, and this is what you do as a coach, I think probably is the most impactful skill as a coach is getting people to come to it on their own, right? Just
Yeah.
giving
Yeah.
them the options and kind of showing them what's out there and allowing them to make their own decisions to get them there, because that's really the most impactful for them, not having someone else
Yeah.
tell them what to do, but really coming to that on their own.
That's it. That's where the storytelling and the questions and all of that comes in, but starting from a place of complete empathy where you're in their shoes and you know exactly where they're coming
Yeah,
from. And that is such a hard thing to do because I don't think we're socially conditioned to do it. It's more like, this is what I think and this is what you should be doing. And that never works. And so, yeah, it's a skill set.
for sure. Fourth and final question, Param, what does success mean to you?
So I will give you my definition of success
Yeah.
is when every day I'm making progress and empowering myself to be in a better state and show up as a better person. And in the process of, if that is influencing the people around me and allowing them to show up as the best version of themselves or a better version of themselves every day, I would call that true success.
Awesome. Love that. Amazing. And we already mentioned briefly, but if you would repeat for us, because I always like to ask our guests how listeners can find you or reach out to you if they want.
Yeah. And so again, generationalwealthmd.com is the community, the website where we actually have tons of resources for anyone thinking about beginning their real estate investing journey, including a free ebook where I lay down numbers. And so I think it's really eye-opening to look at that. And then gwcapital.com is where for anyone thinking of becoming a passive investor, feel like they don't have time, but they want to invest in real estate with us, gwcapital.com is where we have those better opportunities for investing in real estate passively. And we have a guide over there, which I think is a great resource for anyone trying to learn to do due diligence. Because I go over how do you build your unique buy box? Because I think the first step is always like, okay, what makes sense for you, which is not the same as what makes sense for your
Right.
neighbor. And then, okay, how do I look at the track record? Like we talked about this, there is no guarantee. So end of the day, and I know a lot of people, it's like that trust factor, but you really need to be able to look at a deal and what's the track record of the sponsor? How do I vet a market? How do I actually vet the deal? And then we actually have a due diligence checklist, which I think is very helpful because then it simplifies the process. So it's not like going in blindly. So I think lots of great resources over there also.
Awesome. Well, we'll make sure to put that in the show notes, and you guys check it out, generationalwealthmd.com. Really excited. I'm so grateful you joined me today, Param. This has been awesome. Thank you again. This has really been a fun conversation.
Thank you. And I had so much fun also. Thank you so much.
I could tell. I really get it. So, to our listeners, thank you guys also for listening all the way to the end once again. And remember, until next time, the best advice comes only when you ask. Real quick, I have one question for you. Did you like this episode? If you did, I want to ask you a huge favor. See, the biggest thing that helps this podcast grow and that will spread this message to the whole world is that if you leave a review, a rating, and subscribe to the podcast. What that does is it basically tells the platforms that this podcast is out on is that you like my stuff and I'm doing something right. So take a few seconds out of your day, hit that subscribe button, leave a rating or review. I would be extremely grateful. Also, I want to hear from you guys. So I want to hear some feedback. If you have any questions for future episodes, please find me on LinkedIn, send me a DM, a connection request, Yona Weiss, and I'd love to hear from you.